Let me ask you a question right now. If the US housing market collapsed right now, would the Canadian market be safe? Would we feel it immediately, or would there be a delay? Would we even feel it at all? The reality is, every time something breaks in the US, like the 2008 housing market collapse, tech bubbles, or banking stresses, Canada likes to say, we're different. So is that true? We do have different regulations, different banks, and different lending standards. But here's the thing, we don't live in a bubble, and we live right next door to the largest economy in the world. So today, I want to break this down clearly, calmly, and fact-based. If the US housing market collapses, what actually happens to Canada? First, let's define a collapse. This isn't a small correction, not a 5% dip. A collapse would look like sharp rise in US mortgage defaults, significant home price declines over multiple states, huge stress on US banks and mortgage lenders, and tightening credit conditions economy-wide. And why is this stuff so significant? That's because the US housing market is tied to consumer confidence, employment, banking liquidity, and equity markets. So when the US economy breaks, the economy as a whole slows down really fast. And here's the analogy. When the US economy breaks, the economy slows down fast. So let's talk trade. Canada sends roughly 75% of exports straight to the US. I'm talking energy, lumber, manufacturing, automobiles and parts, and agriculture. If the US housing market collapses, that's less demand, less building, less renovations, and less consumer spending. Lower Canadian exports, slower GDP growth, and pressure on Canadian jobs. And when people lose their jobs or start to feel uncertain, there's one thing that they'll stop doing first, and that's buying houses. But here's where it gets interesting. If the US housing market collapses, the Federal Reserve is almost certainly going to react. How, you might ask? Well, rate cuts, liquidity support, and emergency lending programs, like we saw in 2008, 4-year mortgage deferrals. Now let's look north, the homies in Canada. Us. The Bank of Canada doesn't operate in isolation. If the US cuts rates aggressively and Canada doesn't, well, that strengthens the Canadian dollar. But that hurts exports, that hurts growth, and that really forces Canada's hand to take action immediately. So even if Canada didn't want to cut rates, the economic gravity would really say otherwise, which means we'd probably see the same things on our end. Mortgage rates would fall, variable rates adjust quicker, and fixed rates, well, they follow the bond market. Ironically, the US collapse could lower Canadian mortgage rates, but lower rates doesn't really matter if people are scared. Now the possibly unknown elephant in the room. The Canadian housing market is much more leveraged than the US. Higher price to income ratios, higher household debt, and more exposure to rate changes. But here's the key difference. Most Canadian mortgages are full recourse, which means the borrowers can't just walk away and hand their keys to the bank. That changes borrower behavior drastically. Instead of mass defaults, Canada usually sees reduced transactions, price stagnation amongst real estate or slow declines, sellers pulling listings off the market because they're just sitting too long, and buyers waiting on the sidelines to see what happens, consumer confidence being through the floor. This is why Canadian housing corrections tend to be more slow and painful rather than explosive. But make no mistake, if unemployment rises, forced sales for real estate tend to follow. And when that happens, the stress starts to build. But let me tell you something a little bit more stabilizing. Canada's banks are heavily regulated and concentrated. Canada is simply one of the hardest places to buy a house in the entire world. Mortgage insurance through CMHC, Sagen, or Canada Guarantee backstops a massive portion of insured loans here in Canada. But that doesn't mean zero risk. It means less sudden bank failures, more controlled credit tightening, and slower feedback loops. So instead of chaos, Canada experiences more of a grind. Lower activity, lower confidence, and lower prices over time. Not a crash overnight, more of a pressure cooker. So if we're looking at what would actually happen to Canada if the US market collapsed, well, Canada doesn't walk away untouched. Canada does not immediately crash like the US did in 2008. And also, Canada doesn't magically decouple from the relationship we've already built with the US. Things would likely just slow down. You know, like we said, it would turn into a bit more of a grind. It's not going to be explosive, but we're going to see economic slowdown, job market softening, interest rate relief, so rates go down, housing market cools right off, and prices flattening or slowly correcting. Yes, this is a bit painful. It may seem uneven, but it is manageable. And here's the part that most people miss. The biggest risk isn't prices. It's the people that have overextended themselves, assuming nothing can go wrong. This is why I say this all the time. Don't buy based on hope, don't borrow based on optimism, and don't plan your entire future on best case scenarios, because the natural cycles of the economy will always come. There are hills, there are valleys, and this is just the way it needs to be. If you're buying, refinancing, or investing, the question shouldn't be, will everything break? Will the economy collapse? The question should be, am I able to manage a less than ideal scenario if things don't work out in the best case scenario? That's how you don't become a statistic. So if you want to talk strategy, the economy, risk versus reward, pre-approved approval, getting pre-qualified, looking at all of your options, you know where to find me. My name is Daniel Titarenko, mortgage expert and broker owner to NextGen Mortgages here in Victoria, and you know where to find me. nexgenmortgages.ca or find me on Instagram, neo_Titarenko. With that being said, don't be a statistic, have the best day, stay educated, stay empowered, and I'll see you next time.